Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 26th of July in London. I'm Caroline Hepker. Coming up today, as a debate rages over when the Fed's first rate cut will come, markets tear up popular trades. Sources tell us that the UK Chancellor Rachel Reeves is leaning towards an institutional rather than public sale for NatWest shares. Plus, Paris je t'aime. As the 2024 Olympics gets underway in the French capital, we discuss the risks and rewards of hosting the Games. Let's start with a roundup of our top stories. Treasuries have held on to their recent gains as traders weigh signs of a resilient US economy against calls for quicker interest rate cuts from the Federal Reserve. This ahead of US inflation data today. The core PCE inflation, that is the Federal Reserve's preferred price gauge, is expected to slow near to the Fed's 2% target on a 3-month basis. Former New York Fed President Bill Dudley is calling on policymakers to reduce rates at their meeting next week.
I think rate cuts are definitely coming. I just think that at this point, there's not a really strong case for waiting. If the Fed doesn't cut in July and waits till September, it's not going to have a huge effect on the economy's trajectory, except the fact that when the unemployment rate starts to deteriorate, it seems to be a reinforcing negative feedback loop. Jobs are lost. People pull back on spending. That leads to further cuts in employment.
Bill Dudley's comments, which were echoed by fellow Bloomberg opinion columnist Mohammed El-Arian, who says that too long a delay on rate cuts could prove a, quote, policy mistake. But yesterday's better than expected US growth data, 2.8% on an annualised basis for the second quarter, has reinforced bets that policymakers will wait until September to kick off their monetary easing cycle in the US. Well, assumptions that have driven global financial markets this year do appear to be getting a rapid rethink. In bond and currency markets, investors are racing to redeploy money. At the same time, stockholders have suddenly grown more sceptical that tech companies' massive investments in AI will pay off anytime soon. Our cross-asset reporter Isabel Lee says that investors are dumping shares of previous top performers.
The tip of the iceberg was really the lukewarm start to the earnings seasons. We have Alphabet with bloated capex, Tesla again postponing the robo-taxi, and investors got thinking, when will we see the ROI of these AI investments? AI, yes, it's revolutionary, and it really drove the market to beat one record after the other, but it's not going to happen overnight, and I think that's what they're slowly coming to realize.
So Isabel Lee there speaking ROI, return on investment. Well, almost a third of the S&P 500 companies have reported second quarter results so far now. According to data compiled by Bloomberg Intelligence, only 43% of those have managed to beat revenue expectations. And that's the lowest reading in 5 years. As to individual stocks, Hermès is bucking the luxury slowdown, reporting a jump in sales. Revenue at constant exchange rates rose by 13.3%, beating analyst expectations. And all regions grew by double digits, with the exception of the area that includes China. Aurélie Husson-Dumoutier, who's Director of Equity Research for Luxury and Sporting Goods at HSBC, says the brand's affluent client base is spurring continued growth.
What we have seen in the recent releases is that the brands that are more exposed to the wealthiest part of the consumer, such as Hermès, are probably performing better because, once again, the price hikes that the luxury goods company have passed on are clearly alienating the aspirational consumer, but have less effect on the wealthiest one.
HSBC analyst Aurélie Husson-Dumoutier speaking to me there on Bloomberg Radio. Despite the success, Hermès did say that it is experiencing softer demand for its more affordable items like silk scarves, reflecting that curb in spending by aspirational customers. Bloomberg has learnt that EU regulators are ready to intervene on Meta's classified ads business. An EU order is likely to rule Facebook Marketplace abused its dominance, and it could fine the social media giant as much as 10% of its annual sales. The decision was still in draft form, and it could change before it's issued later this year. To the UK now, Chancellor Rachel Reeves is leaning towards selling NatWest shares to institutional investors rather than the UK public. Bloomberg has learned that the planned £5.6 billion share sale would come alongside the government's gradual winding down of its stake. Bloomberg's James Walcock has more.
It's a relic of the financial crisis. The UK government remains NatWest's biggest investor after bailing it out in 2008. Former Chancellor Jeremy Hunt had wanted to sell large parts of that 20% stake to the public to try and encourage retail investors. But Bloomberg has learned Rachel Reeves is planning on taking some of that sale to institutional investors. The move may net the government money right as it faces a major shortfall in funds. Reeves is expected to lay out a near £20 billion funding shortfall for public services next week in an audit of the previous government's record. In London, James Walcock, Bloomberg Radio.
And of course, we're expecting NatWest's second quarter earnings out at 7 a.m. London time this morning. And lastly, today marks the official start of the Paris 2024 Olympics, with the opening ceremony due to take place this evening. But as public attention is focused on the Games, France's cybersecurity agency is on high alert. It comes after a number of French websites were shut down last month in an attack that is believed to have been linked to Russian intelligence. The co-head of Goldman Sachs's Paris office, Céline Marie Merchin, says that ensuring the Games take place without incident is going to be crucial for the city.
It's an exceptional period, so people need to show, a sense of adaptability, because that's true that, Paris is not functioning exactly as usual. But I do think that having so much advertising, so much focus on the French economy can only be a positive for all of us.
Goldman Sachs's Céline Marie Martin, who is speaking there to Bloomberg. A task force of 630 people have now been assigned to the Games, but authorities worry that non-traditional targets may also be in the hackers' sights. So the risks and rewards of the Summer Olympic Games, of course. Those are some of our top stories then for you today. Also, though, there's another story that's really caught my eye on the Bloomberg terminal. It's Friday, so I want to do something fun. It's all about music, but it's political soundtracks. I mean, the music that politicians use at their rallies can be so powerful, especially also when in recent years there's been so much argument from artists who don't want their iconic songs to be used. There's a great story on the Bloomberg terminal. Kamala Harris is using a track from one of the world's biggest pop stars for her first official campaign video and also for her early election events. Beyonce's song Freedom, which features the rapper Kendrick Lamar, is the track. And the singer's team has approved it for use in Harris's video, and they've also managed to get licensing rights to it. Harris talks about her campaign, and she's based it all around the idea of freedom, or at least the initial lines. We choose freedom. Then you hear Beyonce's lyrics. Harris sort of trying to position herself as a moderate, freedom from gun violence, freedom for reproductive rights, that sort of thing. Trying to, I suppose, lay out her offering to the US public, of course, ahead of the November election. I just thought it was really interesting, and we've got a great piece on the terminal. We've covered so much, of course, of the unusual US presidential race. So I quite like that piece. It's on the terminal. Have a read this morning. Back to more traditional matters, though, shall we? The Fed's preferred inflation gauge is due out today. The headline year-over-year figure expected to come down from 2.4 to down to 2.4 from 2.6% previously. You've also got Asian stocks and US futures up just a little bit. Swaps now pricing in a Fed rate cut in September. And this is the great debate. Bloomberg anchor Kriti Gupta joins me now to discuss. So the issue about when we're going to see a first rate cut and then how deep those rate cuts will go. It's really raging in markets now. Why?
It is. It feels like it's just the stage for Jay Powell to need a soundtrack when he comes onto his press conferences any minute now. Look, what's tricky here is that a September cut was largely priced out of the markets because of the election risk. And that has really turned around very quickly simply because of the data and the drops you've seen in the data. In fact, the data and I'm going to go through a couple here, your CPI, your consumer confidence, your PPI numbers, so basically your production numbers as well, that shows kind of factory output, things like that. Even things like durable goods, for example, which is really taking engaged in the U.S. manufacturing sector. And remember, similar to, or I should say different to Europe, manufacturing is not the core of the American economy. I think it makes up something like 20% relative to 80% of services or something like that. But you are seeing pockets of weakness across the board. And it's kind of coming out of this narrative of consumer resilience and economic resilience out of the States. And then you see this big drop. I would argue you even see it in European earnings. I've now started to say some of that weakness that we saw from China, we're actually now also seeing from the United States, and there is no longer that counterweight despite us meeting some of those expectations. So the top line here is simply that because the data is showing that early weakness, that's why you're starting to see the cuts more early priced in, despite the fact that the Federal Reserve has made it quite clear that they don't want it to be any sort of related to any sort of political activism or election or anything like that, because of course it would move the stock market if you do see a rate cut.
Yeah, absolutely. Although surely it can't be to the same level of the slowdown that we've seen in China. It's certainly not at that kind of depth. The other issue, though, I mean, you kind of mentioned earnings and the assumptions being recalibrated around Fed rate cuts, but there's also the kind of AI story that plays into this as well, the rotation in stocks.
There is. And look, the momentum that you're seeing in the stock market lately to the downside is really just taking out some of the steam from those AI plays. And you're also seeing in the chip sector, which arguably some would say is a part of the Trump trade, that if you basically look at chips the way you look at defense stocks, for example, which is so much of their rally has been, yes, AI driven, but also government contract driven. A lot of those government contracts could get taken away in a Trump administration if you get rid of the Inflation Reduction Act. That's a lot of nitty gritty for basically saying that the pullback you're seeing in stocks very much has an effect on things like financial conditions, for example, but also how effective the kind of wealth effect is on regular consumers. That affects the data into consumer confidence and circles back into some of the data that the Federal Reserve takes into account. So if we continue to see a bit of a red on the screen when you look at the stock market, and it does indeed go to correction territory, we're not there yet, but it is heading that way, or at least it seems to be. That's where you could see more of an argument for those cuts at a time when there may not have been as strong of a case before.
Yeah, absolutely. And personal income and spending and all of that data, the PCE data dropping at 1:30 p.m. London time. Kriti, thank you so much for joining me. I'm going to quiz you next time you come into the radio studio. What should be the rock song that accompanies Jay Powell? I don't know. Music, not my forte. I have to quiz someone else on it. Right. Thank you so much to Bloomberg anchor Kriti Gupta there. Well, should we all be getting ready also this Friday to fall in love with France? The Paris Summer Olympics 2024 begins today with what promises to be a spectacular opening ceremony in the shadow of the Eiffel Tower. Comes though at a tricky time, doesn't it, for the country politically, with Macron's government shaken by the recent election, a caretaker government in place, no prime minister. Joining me now live from Paris is Bloomberg's Caroline Conan. Caroline, what an exciting day for you. What to expect then from these Olympics? The opening ceremony, that 4-mile route along the Seine. Just paint a picture for us firstly.
Yeah, it's very exciting. It's for the first time ever. It's actually not going to be in a stadium, but outside, right in the city, along the Seine River, along a 4-mile stretch of the river. You're going to have nearly 7,000 athletes sailing down the river on 85 boats, each representing a different country. About 120 heads of state and government are going to be attending. You're going to have Jill Biden. You're going to have Olaf Scholz. You're going to have the UK Prime Minister, Keir Starmer. You're going to have the Israel President Herzog. And it's going to be quite impressive. I was talking to the Orange CEO yesterday on how they're planning to broadcast this live to about 1 billion people with 200 cameras on body cams on boats. Of course, there's going to be a lot of security as well. Around 45,000 security forces on duty all around Paris, with even police divers checking under the water if there's no attack on the boats from underneath. So quite impressive, high security. And at the end, about 3,000 dancers, singers for a big finale at the base of the Eiffel Tower. We expect Lady Gaga, we expect Aya Nakamura, and possibly a comeback of Céline Dion as well.
Oh, wow. OK. A huge moment then for France, for Paris to shine. I mean, not just the sports, it's the culture. Politically, though, it's a bit tricky.
Yes, it is a little strange atmosphere, given we still have no new prime minister, no new French government since the snap legislative elections runoff on July 7, which, as you know, resulted in a hung parliament and no majority. President Emmanuel Macron has actually called for an Olympic truce during the games. So the Prime Minister, Gabriel Attal, should remain a caretaker, at least until the end of the Olympics, mid-August, or this could go even until the end of the Paralympics, which is the first week of September. So we're going to see, but at the moment, the executives are trying to forget this political drama we've had over the past months and trying to focus on the excitements on this opening ceremony.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.